So if you get a high earnings yield now, that means there are very low expectations for the companies that you're buying. Even though they're getting high earnings yields, there's low expectations for the future.
You shameless cloner. Want to track portfolios of famous value investors like Warren Buffett? See their buys and sells, current and historical holdings? Just visit valueinvesting.guru. It is valueinvesting.guru. Link in the description.
Explain why looking at the past is predictive of the future, and then get to the number of securities you should hold. First, why is the past predicting the future?
Right. That's actually a wonderful question, and you know, frankly, a very logical and obvious question to ask. How can you look backwards and then figure out what's going to happen in the future? And in fact, we're really not doing that. What happens, we were talking about before, is how people have a very short-term horizon. And you know, the big secret for the small investor is that they can keep a long-term horizon. So why would the market allow us to buy a company cheap relative to its earnings? We called it an earnings yield. In other words, why would we get a 15% earnings yield from one company and only 5% for another? Why is the market giving us this bargain? Generally, the companies, if you look backwards, that earned a 15% earnings yield, most people don't think that'll continue in the future. At least the next year or two won't be as good as the most recent past. And so they're willing to sell it to you cheap relative to its past earnings. So they think the next 1 year or two will be down from where it is. So they allow you to buy it at a bargain relative to past earnings. So these are you're buying all out of favor companies. They earn high returns on capital. You're getting a high earnings yield, but people are worried about the next year or two that they won't be as good. So they discount.
So Obamacare comes along, dump the healthcare stocks.
That's a perfect example. You know, healthcare stocks show up on our list now because everyone's worried about what's going to happen, you know, under Obamacare. All kinds, you know, we have a company called Gamestop that keeps coming up on our list because everyone thinks it's the next blockbuster. They sell games.
So look at the news and companies that look like they're going to get a hit.
Well, we really do it by the we really do it by the numbers. So if you get a high earnings yield now, that means there are very low expectations for the companies that you're buying. Even though they're getting high earnings yields, there's low expectations for the future.
So you're not buying a company that's going broke.
Exactly. You get high free cash flow now. You think the next year or two might not be as good, or there's a lot of uncertainty. So you buy them with low expectations built in, and if they do a little better or a lot better, you have the chance for asymmetric returns on the upside. And those are precisely the stocks that institutional managers who worry about doing well in the next year or two systematically avoid and overcompensate for that because they don't want to be there. So if there's uncertainty about the business, or you kind of know it's not going to be as good in the next year or two, institutional investors systematically avoid those stocks. You don't pay a lot for anything. So if they do a little better or a lot better, you have a chance for asymmetric returns. If the low expectations come in, you didn't pay for high expectations. So hopefully you don't lose very much. So if you don't lose very much on the companies where the good news doesn't get a little bit, you know, the news doesn't get a little better than expectations, and you make a lot on the companies where it's a little better or a lot better, you know, on a surprise, you can end up making a lot of money, and it's very systematic, and those factors have actually gotten stronger because of the institutional bias now in the market.
You shameless cloner. Want to track portfolios of famous value investors like Warren Buffett? See their buys and sells, current and historical holdings? Just visit valueinvesting.guru. It is valueinvesting.guru. Link in the description.